Today we're going to talk about new tax havens, or a new list of tax havens, and I'm going to give you an update on the status of tax havens around the world and what you might like to know about how that would apply to you, and if you're thinking about forming companies, etc., where that would apply to you actually setting up companies or perhaps relocating. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the notification bell. Welcome, thank you for being here. I am Michael from Offshore Citizen. If it is your first time, we are some of the foremost international tax experts and relocation specialists in the world. So if you're interested in how to optimize your global tax, optimize the tax for your business, set up residencies, citizenships, companies, bank accounts, asset protection, etc., please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer, link in the description below, or send a message through offshorecitizen.net. Okay, with that out of the way, so what has recently happened? What has recently happened, no, there's not countries that have magically appeared out of nowhere. However, the EU has a list of tax havens, and they recently added 3 countries to that list. These are Belize, Seychelles, and Antigua and Barbuda. And so you might say, as some people are, of course, these are tax havens. Now, we'll talk about that in just a second. But before we do that, I think it's worth noticing something really interesting. The EU kind of has a habit of creating these lists to sort of politically shame and apply pressure to particular countries. Now, it's worth noting that one notable country on the list belies the fact that this is a political list, not with anything to do with much of anything, and that is, guess what? Russia is one of the tax havens listed, and of course, Russia is not much of a tax haven. So, you know, it's the real term they use is non-cooperative jurisdictions, and so that tells you a little bit of something. While at the same time, because some people will say, "What are you talking about? These aren't tax havens." And the truth is, you know, some place like Antigua is a tax haven, and you know, some of the others, yeah, maybe it could be. But then you'll have a bunch of countries that are clearly tax havens. For example, maybe you'd say Isle of Man or Cayman Islands or something like that, that won't be listed on the list of tax havens. So, you know, this is it's interesting how they formulate the list of tax havens, and it is largely political. Now, there's some truth. So let's just talk about the real update, which is the state of tax havens in the world at the moment. So I have been kind of in this space since around 2012, I think, something like that, 2013, around 10 years. And over that time, the countries that we have used with clients have changed quite a lot. Now, at this point in time, and for the last while, I've been saying to people, I'll have people call all the time and they'll say, "Oh, I talked to somebody and they said, you know, set up a company in BVI or set up a company here." And I always tell people, look, like where you set up a company is not really the key thing. You need to first understand the rules and how they apply, because the substance will trump all of that other stuff, okay? Now, if you get the substance right, then yes, we can have a conversation about where the countries are. So anyway, when I started, you know, we could use places like Antigua or Anguilla or BVI or Marshall Islands or Vanuatu or Liberia or like some of these places that are more far out. And for quite a few years, we have almost entirely not used those places, okay? I've talked about this in the past. What has fundamentally happened, and I would say has become increasingly difficult, like just in the last couple of years, the number of places that you can actually have a functional structure and get zero tax have dropped quite a bit. UAE, which was formerly, you know, straight up zero tax, now has corporate tax for a lot of scenarios. There's, yes, some carve-outs, but a lot of scenarios you're going to have tax. Cypress, which we used to be able to fairly easily have zero tax companies, now has made it a fair bit harder. And then we have all these traditional tax havens, like places in the South Pacific or places in the Caribbean, where, sure, you can have a zero tax company pretty easily. However, you're going to be in a situation where, A, of course, your home country might come after you, but more importantly, you have banking issues, right? So whenever we're conceptualizing what to use, and when a client comes to us and they say, "Hey, where should I set up a company and what should I do?" We go through, you know, here's all the rules and here's how the rules apply to you. And then based on those rules, here's the substance. And based on that, let's talk about the countries. That list of countries typically doesn't include places like Seychelles, Belize, even Panama. Panama is kind of a more functional one, which is also on the EU list. You actually can get banking in Panama. There's some stuff that you can make work with Panama. Panama is not a pure tax haven, and so by pure tax haven in this case I mean zero tax place. In fact, a lot of these others are not as well. So if you look at some place like Seychelles, Seychelles is not domestically a zero tax country, but they have IBCs. So IBC stands for International Business Company. And there's various variations of these around the world, but essentially it is a special class of company that is a tax-exempt entity. And so Belize is like this, Seychelles is like this, a bunch of other places are like this, where their local companies are not necessarily tax-exempt, but you can get an entity which is tax-exempt. So what do we use these days, and what would we recommend? Well, as I said, in most cases, those sort of common tax havens you would discard. Now, will you discard them in all cases? No, you will not. There are a few cases, notably if you don't need banking, or if you can layer something else in there that can provide your banking for you, or you're in a situation where you're sufficiently large that you're dealing with the types of banks who don't really care so much about the jurisdiction, so long as they understand the source of funds, and it's typically like wealth management or holding company structures, etc. And then the final case might be, and this kind of blurs into the line of the second category of companies that we would, or countries that we would deal with, are cases where you can actually afford to have, say, local resident directors. So Cayman Islands, Bermuda, Isle of Man, Jersey, Guernsey, these types of places are places that are actually quite functional. You can get banking there, you can use a company, etc. It's a fair bit more expensive, and you typically need to have a local fiduciary. So you have somebody who, or some company typically, that provides the director and sort of management services for you. It removes you from it. It does help with your tax compliance because you can separate out some of the management and control rule issues in those cases. If you're talking about places like Isle of Man, Jersey, Guernsey, then you can actually get payment processing that's relatively decent. And so that's certainly an option. Great. And off you go. You can be functional. It's just you have to understand it's probably more expensive and it's probably more hassle versus some other alternatives. So hence we kind of keep sliding down the line, and what do we go to? Well, it depends a little bit on the type of income that you have, and it depends a little bit on what else you're putting in place. So for example, Cypress, like I said, used to be good for zero tax because you could have a non-resident company. They've, starting at the beginning of 2023, made it quite a bit more difficult to have a non-resident company because it has to be resident somewhere else formally, which it didn't used to have to be. However, that being said, Cypress companies can still be useful, especially for certain classes of income. So holding company regimes, for example, there's no capital gains tax on sale of securities, etc. Typically, you can receive dividends tax-free. You can pay out dividends without withholding tax. There's like a bunch of things that make Cypress companies still fairly useful. The corporate tax is still 12.5%, which is not an insanely high number with no withholding taxes. And you're in a situation where if you can get under an IP Bucks regime, you can get an 80% discount on that. So if you can qualify for the type of income you're able to use, that can get you down to 2.5%, which is pretty good, right? Malta, kind of a similar sort of deal. Now, Malta, I find, is unbearably bureaucratic and expensive and inefficient. However, there are certain cases where it works out pretty well. They have basically an effectively 5% tax regime in a bunch of cases, and in a few cases, 0. We can do a hybrid between some of these countries, and this is like really fancy tax planning stuff that most people are not really familiar with how it works, but essentially you can have companies that are resident in a country different than they're set up, and you can mismatch between the rules. And so there is some stuff that can be done in that regard fairly effectively, but again, it's a bit more of a hurdle to handle. And so not usually something that most people will deal with, but you can have Hungarian companies this way, you can have Cyprus companies this way, you can have a few different countries' companies in this regard. And so that's pretty cool. The banking situation in Malta is abysmally bad, and so we don't love to do it. But that being said, again, there are certain types of banks and certain types of situations that it can work, and you can get payment processing in the EU, which is fairly attractive. Estonia is interesting. There's no tax on profits there, although there are tax on distributions, mainly specifically dividends. You can, if you're in a situation where you are personally resident, you can receive wages, and those can be tax-free, and so that's useful. Estonia is a really easy place to do business, and so there's certain people for whom Estonia is actually a pretty good place. Then you have someplace like UAE, like I said, certain classes of income in certain, so they have what they call qualified free zones with qualified free zone activities that are tax exempt, but that doesn't cover what most people who we're dealing with will be involved with, but sometimes it can show up. Similarly, there's various free zones in other parts of the world, places like Georgia, for example. Georgia kind of got rid of a lot of their tax exemptions, but for certain types of activities, it can still work. And there's a bunch of other countries that have similar sort of stuff. Then you have Singapore, Labuan, Hong Kong. Hong Kong is typically the more accessible of these. Labuan is fairly accessible in a lot of cases for 3% tax, which is pretty good, or holding company regimes, 0%. Singapore is by default not a 0% tax thing. So to get yourself to 0% tax, either it's a holding company regime or you need to kind of do some finagling, but is in theory possible. So that's something to be aware of. Then we can go and we can look at other options like US LLCs, UK LLPs, Canadian LLPs, etc. These would be technically not zero tax in the absolute sense. They're pass-through entities. And so pass-through entities, you're going to be in a situation where, depending on how it's treated in your home country, could make a pretty big difference. So for example, if you're in Canada, a US LLC is considered a corporation, so there's some blocking there. If you are living in Australia, it's considered a partnership, so there's no blocking there. So you really have to always, anytime you're planning out what to do, you have to start by figuring out where are you resident, where are your clients going to be, where are your operations going to be, how are you going to charge your clients, what currencies are you going to deal in, and then based on that, we start working out everything else. So that sort of becomes the foundation, and it's based on figuring out the rules that apply to you, and therefore will transmit onto your companies, and then how do we work around those rules in terms of planning it. Okay, so very, very important stuff. Those are the common ones, I would say, that we would think of. There are some others like Mauritius, there's Bahrain, a few of these that are sort of lesser used, but used in certain types of situations. And then of course there's trusts that can be used. It's fairly common that a lot of trusts are tax neutral in the countries there are. Even places like, for example, a New Zealand trust is tax neutral in New Zealand, so long as there's no New Zealand income. Kind of interesting. But trusts are much more sophisticated. You need to use trustees. You need to think about that. The country that you're in, trusts are a common law instrument, and so they're typically not recognized or not. It's not necessarily so clear how they're treated in a civil law jurisdiction. So that gets to be more complicated. But I would say that increasingly, you're kind of like forced to funnel into a relatively small number of cases if you're looking for something that's fairly low cost, fairly low maintenance, and then you're looking for someplace that has banking as an option, ideally fairly reasonable banking, and especially if you layer payment processing on there, this is kind of the pigeonholing that you get in. So anyway, that's in terms of companies. Like I said, yeah, there are rare occasions where these traditional tax havens that get named on some of these EU lists might be useful, but it's very rare, mostly because of the banking and especially because of payment processing. So anyway, hope that helps. If you have questions about it, if you're looking for assistance for you, please reach out to us, book a call with me, and I will look forward to seeing you on the next video.